Well, Travis, earnings season is officially underway, and over the next few weeks, we're going to find out if corporate America can justify these elevated stock prices we have today.
Yeah, exactly, Steve. I mean, the market's had a strong run, but now expectations matter more than the headlines. I mean, today we're going to talk about what investors should watch during second quarter earnings and how new Fed Chair Kevin Warsh's comments on inflation could influence, the second half of the year here.
Yeah, that's right, Travis. Guidance is everything. Investors want answers to questions like, are consumers still spending? Are businesses continuing to invest or reinvest in their companies? And are profit margins holding up despite these higher costs that we've been seeing? And are companies confident enough to raise their outlook for next quarter? The market already assumes this growth, as you had mentioned. If CEOs start to lower expectations, that volatility is going to creep in real fast.
Yeah, any sign of the perfection ending, is going to create some volatility.
Yeah.
So, and remember, Steve, I mean, we're coming off several quarters where AI spending has dominated the conversation. I mean, the amount of money going into building out data centers for AI infrastructure has been staggering here.
It is.
So, in this quarter, though, I mean, investors are going to begin to want proof that those billions of dollars that are being spent are actually translating into revenue growth or margin expansion, not just creating exciting headlines about the future.
Yeah, one thing we always remind clients is that the stock market doesn't price today, it prices tomorrow. Mm-hmm. A company can report fantastic Q2 earnings and numbers, but if management's guidance is showing slower growth for the rest of the year, investors may still sell the stocks.
Yeah, and it works the other way too, Steve. I mean, even companies might come out today with average results, but then that stock can rally if the executives have an optimistic view, about the next one or two quarters. And that's why earnings calls these days are, they generally move stocks more than the actual earnings report themselves.
Yeah. The other big story this week came from the Federal Reserve Chair Kevin Warsh, which
you got a whole new name there.
I got to remember that name now.
Make sure.
During his testimony during Congress, it was very direct. It was straightforward, wasn't it? I mean,
yeah.
It was no mincing words.
I mean, it basically said, the Federal Reserve has no tolerance for persistently elevated inflation and pledged that if, policies managed correctly here, the inflation surge of the last 5 years will become a thing of the past. At the same time, though, as most people do when they're testifying in front of Congress, they avoid giving any indication of the next interest rate move that the Fed might enact.
So true, and that is important. Markets have spent the last few years of just obsessing over possible rate cuts. Warsh's comments remind investors that the Fed's primary job isn't about making Wall Street happy, it's about restoring long-term price stability, which is an interesting message considering who put him in that seat.
Yeah, there's definitely a preference for lower interest rates, but the person who put him in that seat, right?
No question.
So it's a good perspective here, Steve.
It is.
Low and stable inflation obviously creates a healthy environment for businesses, consumers, and investors, right? And even if interest rates stay higher for a little longer, getting inflation under control creates a much stronger foundation for future economic growth here in the country.
Yeah, Travis, as the earnings season unfolds here, here are four things that we really need or that investors need to pay attention to. First is earnings growth.
Yeah.
Is demand still healthy? Second, profit margins. Are companies protecting profitability? Third, capital spending. Are companies continuing to invest and reinvest in their companies? And finally, guidance. What do executives expect for the remainder of the year?
Yeah, and because those four areas tell us far more than whether a company beat earnings by 3 cents, they can help. I mean, if you take all the aggregate messages you're getting on earnings calls, it helps paint a picture of where the economy is going, and the markets or where the markets might be headed next. It's better. You've got the economists out there trying to get headlines on CNBC, or you can listen to what's happening in underlying businesses. Right?
That's right, yeah. And the next several weeks, really, Travis, should give investors a clearer picture of whether earnings growth can support today's market valuations.
Yeah, and with the Federal Reserve still focused on, defeating inflation rather than rushing into cuts, both earnings and guidance, may matter more than usual this quarter. We might see more volatile moves. So, but I mean, if you're going to have questions about these developments or how they fit in your financial plan, reach out to the Allen Capital Group team. I mean, we're more than happy to help you figure that out.
Yeah, absolutely. Travis, has been great. I look forward to it next week.
Look forward to it as well.